And welcome everybody to the live session on monitoring for inclusive insurance business. So it's good to see so many participants have joined this session. It's a pity we couldn't meet in person, but we'll still be able to have quite a lot of discussion today, I think. So this session covers a very important part of supporting the expansion of inclusive insurance and really looking at the performance of the business and how customers are being treated. And for this session, we'll look at some of the key elements from the module that was on the learning platform and some of the questions from the exercises so that we can discuss the answers. So there are quite a few polls, so please be ready to give your responses to the polls, and there's also a chance to give some input into your experiences in your countries. So let's look at the next slide. So just to have an overview of the process of monitoring for inclusive insurance business. So firstly, we would collect and analyze the data, and then we would assess the risk and then determine what an appropriate corrective measures might be to address any weaknesses in the business. So we really want to make sure that we are using quality data that is correct so that we can have confidence in the analysis that we've performed. For analysis, we're mostly going to use KPIs and risk and benchmarks, and we'll have a look at that a bit later. And then for interventions, we want to go beyond just giving penalties to our insurers for non-compliance and really look at interventions that will improve the experience of customers and protect our consumers. So for inclusive insurance business, we really want to simplify our processes and make it appropriate to the types of products that are being provided. And then also we want to have a big focus on the treatment of customers and make sure that our vulnerable customer segments are being treated fairly. So let's have a look at the next slide. So here's just a reminder of the overview of what is monitored for inclusive insurance business. So firstly, we will look at the development of the market. And here we consider the growth and the size of the market, the diversity of products, and the commitment of insurers to be involved in this market. Then the viability and the financial performance of the business is also very important, just as it is for conventional insurance business. And here we will consider whether the microinsurer is solvent and the quality of their assets, as well as the claims experience, the expense experience, and the growth of the business over time. And then finally, an area that receives a lot of attention for inclusive insurance business is the treatment of customers. And here we will look at whether the products are good value for money for our customers, and also whether they are receiving a good service and have a good experience through their purchase of insurance products. So we really want to focus on the experience of customers and build up a good reputation for the insurance market through good experiences that customers have with their insurance products. So let's have a look at the next slide. So here we have our first poll question. So what we really want to aim for in market development is to have a competitive market where consumers have a choice of different products, and we have a large number of customers that are covered by insurance. So here's the first question of the day. So what stage best explains the level of development of inclusive insurance in your country? So it could be nascent, which is a very low number of people covered and only really credit life business, or maybe the business is growing. So you can, where there are more customers covered. Maybe your market is at the diversifying stage where there's a greater choice of products, or lastly, at the competitive stage where there's a wide number of people covered, lots of different products and distribution channels. So if you want to still see the question, you can minimize the poll and answer it in the chat. So please submit your votes now so that we can see where most of the markets are sitting at the current level of development. So maybe another minute. I'll fill in mine. Okay, so thanks for all your votes. You could still vote now while we're talking. We can see that we only have a few countries that are sitting at the more developed stages of diversifying and competition. Most countries are sitting at the nascent stage, so it's good that you're here on this training to learn more about how to develop inclusive insurance in your countries. And I'm glad to see that there are a few countries that are experiencing some growth in their markets. So maybe let's have some thoughts and input from one or two of the participants on whether there are any initiatives in your country that would support the growth of inclusive insurance in your country, that would be able to help you move from the nascent stage to the growing stage of the business. So I thought maybe, I don't know if somebody from Zimbabwe can maybe share their experiences, and maybe somebody from Tunisia. And it'll be good if you could do that by the microphone. But if you don't have access to a microphone, it's okay if you can give your responses in the chat.
Precious, Abdisattar, are you guys able to come in? Feel free to post it in the chat if that's easier.
Or maybe while we're waiting, if somebody else from one of the other countries has got an example of something that your country is involved in to help expand inclusive insurance, that will be great.
I can mention one initiative actually that the UK had, very much focused on actually expanding insurance for the uninsured. And that was, they did a public consultation on insurance for cancer, for people who were suffering from cancer. And also they did a sandbox, a regulatory sandbox, very much focused on providing new products in the insurance space as well.
Thanks, Pascal. So I think that's quite a nice example. So we often think about the inclusive insurance market as the low-income market, but sometimes it might be people who don't currently have access to insurance, who might normally be excluded from insurance products, like people who may have a risk of cancer. In South Africa, we have a company that focuses on providing insurance for HIV positive people as long as they are taking their treatments. and that is a way of providing insurance to a group of people who wouldn't have had access to insurance previously. They also provide insurance to people who are diabetic, and they have a strict regime of making sure that people follow their health treatments well. So please, so think about it. I think a lot of the questions that are in this session are really meant to help you think about what you need to do to try to move your country from the current stage of development going forward to the more competitive stages of development. So so think about even if there aren't any initiatives happening currently, whether there are some initiatives that you would like to implement over time. So great, let's move on to the next slide. Okay, so we've had an example from Romina who says that really public awareness of insurance is a big issue. Also, maybe I can give another example then, Romina. So I'm from Albania. So in Zambia and Rwanda, the regulator has looked at working with the insurance industry to have an insurance week where they promote insurance in some of the more rural locations, and they have created quite a lot of awareness of insurance through those projects, and that's a combined effort with the industry and with the regulator. So awareness is a big challenge for most countries. Great, thanks, Romina. So if we have a look now at some of the KPIs on how we would assess the risk of inclusive insurance business. So our first KPIs look at the financial soundness, or whether the business is solvent. And we have the solvency margin, the security of the assets, and the retention ratio. So let's have our next poll on the screen now. And here, let's rate the risk of this insurer based on the solvency results and the security of the assets. So it's probably best if you minimize the screen, because it's difficult to see the ratios if you don't, because the poll will be covering the screen. So you can choose between whether you think that the insurer is, the level of risk for this insurer is high, or whether you think it's moderate, or whether you think it's low. So it will be good if we could have some justification for what we voted. So think about the reasons why you would consider this insurer to be low risk, the reasons why you would consider this micro-insurer to be high risk, and the reasons why you would consider this micro-insurer to be low risk. And maybe we'll have a little bit more time for one more person to vote. Okay, great. So we've got some reasons. So most of our reasons are looking at how the solvency margin has declined over time, and also the fact that there's no reinsurance. So we've got a mixture in terms of votes, in terms of high risk and in terms of moderate risk. So we've already had two suggestions of the fact that the risk is increasing over time because our solvency margin has decreased. And we would also want to investigate the reinsurance. But maybe let's have somebody who assigned a rating of high to give the justification for that rating. Maybe somebody in addition to the people who
Janice, try turning your video off, please, because you have frozen. Just turn the video off and continue with audio only for a bit. Janice, we can't hear you speak at all. So try turning the video off. If you can hear, yeah.
The assets is the quality of the assets.
Janice, can you hear me?
Yes. Yes.
Okay, can you turn off your video now?
Thanks. Okay.
Janice, we have some questions in the chat actually, and I'm sorry if you've already responded to them, but I didn't hear the responses. But we've had one question that's come through. Does security of assets means in this case quality of assets?
Yes, Adriana, yes, the security of assets is the quality of the assets. So we would like our assets, for good quality assets, we would like them to be secure and liquid.
Also, Louise from Zimbabwe has come back to you on the point of why she responded high in the polling. And she said the solvency is declining and no reinsurance, so I think the risk is high.
Okay, thanks, Louise. Oh, here we go. We've got one moderate. This rating is a little bit difficult to decide between moderate or high, because the solvency margin is still at a level that we may consider to be moderate, but it has been decreasing. So we definitely can say that the risk is increasing over time. About security quality.
So I think somebody has come in, but your line is not great. Could you either repeat?
That's Janice. Rochelle, can you just remove Janice and then we'll have her come back in, because it does help when you leave and come back.
Okay, Janice, yeah. I'm removing you now. I don't know if you can hear, but I'll also write on WhatsApp.
Also, other comments that have come in on the chat, which some of you may have already seen, for rating it high, is the possible rationale from Adriana, decreasing solvency margin and having full retention of the risks. Yes, exactly. Dava as well, similar to Louise, solvency margin has fallen and the company has no reinsurance. And one comment here from Abdisattar as well, moderate, but require monitoring due to the decline in tendency. Yes, exactly. And I think Janice has just rejoined us.
Sorry. I have been fine with Wi-Fi for the whole week, so let's hope that the rest of the time will be fine.
We can hear you well now, so the audio sounds good now.
Okay, great. Thanks. So yes, so it's difficult to choose between high and moderate because the solvency margin is still at an appropriate level, but it has been declining over time. But the security of our assets is very low. We don't have enough liquid and secure assets. So we would want the insurer to address that problem. And then in terms of the retention ratio, we might not be that concerned for this insurer if it's life business that they are retaining most of the business. Because for microinsurance, we're not going to have any large individual claims, but we would want to investigate whether they have catastrophe reinsurance, maybe in our on-site inspections. So you could rate this as moderate to high and definitely say that the risk is increasing over time. So let's go to the next slide and we can have a look at the financial performance of the business. So here we have an example of health insurance business and weather index insurance business. So we'll have a look at the health insurance business first. We have the claims ratio, which has increased over time, and the expense ratio. So let's rate the risk of the business in terms of the financial performance of the business using this claims ratio and this expense ratio in the poll that will appear on the screen. And again, we can rate this as high or moderate or low. So think about where you think the risk of the insurer would be based on that claims ratio and that expense ratio. So I'll give you a little bit more time to think about your responses and then we can talk about them. So we've had nearly 40% of you have voted for high, and then just over half are voting for moderates, and we've just got one person who's voted for low. So let's think about, or let's have some responses from in the chats from the people who voted who rated this insurer as high, in terms of the reasons that you would give for rating this insurer as high.
Has raised her hand.
Go ahead, Mariam.
Okay, Miriam. Great.
Okay, hi again. I just rated high instead of moderate because I have to just emphasize my answer that this is because of this pandemic situation, because it's really changed market scenario. So I just got high depending on this pandemic situation, not just as a regular situation.
Oh, okay. So we also need to consider the environment. So Miriam, that's very important. And then you want to keep an extra careful watch on your insurers during these kinds of adverse circumstances. So yes, that's very important. Does anybody else have any other contribution in terms of why you would rate the insurer, the health insurance business as high? Okay, then what about the people who rated the business as moderate? So you're welcome to put your hand up or to give a response in the chat function as well. Okay, then I'll give my input in terms of looking at this rating. So for our health insurance business, we can see that our claims ratio has increased from year 0 to year 1. And in year 1, it's actually over 100%. So this means that our business is making a loss. We're paying more money out in claims than we are getting money in premiums, even before we've paid for our expenses. So our business will be making a loss because of the very high claims ratio. So even though our expense ratio might be considered to be moderate if we looked at the benchmarks, because we have such a high claims ratio and our business is loss-making, we could rate this business as high risk because it's loss-making. And then you as a supervisor would want to ask the insurer, why are they experiencing such high claims ratios? Why is it increasing over time? Are they affected by claims fraud? Have they been experiencing any anti-selection? So it's very important to understand the reason for the changes in this claims ratio and why it's above 100% in year 1. So let's have a look at the weather index business. So that's on the right-hand side of the screen. So here, let's rate the risk of this business. If we look at the claims ratio, here we can see the claims ratio declined quite dramatically from year 0 to year 1. And the expense ratios remained the same at 40%. So here again, let's put the poll up on the screen. Again, we can rate the risk of this business as high or moderate or low. Thanks, Adriana, for your comments on the risk of the business. And you're right. So we also need to be concerned about whether the information that we're receiving is accurate, and whether the insurer is taking a very long time to pay claims, and that's why the number of claims is increasing from one year to the other. But definitely our claims experience is a big concern for us as an insurer for the health business. So I'll give you a little bit more time for the agricultural business. Okay, so let's have a look at the risk rating for the weather index or the agricultural business. So we've got a few people who have voted high. Most of us have voted moderate, and a few people have voted low. So here it's very difficult to really determine what the risk rating should be for this this business, because there's such a big change in the business from one year to the other. So in year naught, we've got 500% claims ratio. So our claims are 5 times the premiums that we received that year. And then we've got a very low claims ratio of about 18% in year one. So the claims ratio is very variable, and it's decreased dramatically. And we could expect to see this kind of experience for agricultural insurance or for weather index insurance, because you could have a very large number of claims in one year if there's a drought or frost, and a large number of your policyholders claim, or we could have very few claims when the weather is good and all the crops produce a good yield. So yes, Louise, that's the very important point about weather index insurance. So for our weather index or our agricultural products, we can't look at just 1 year. We need to look at the ratio over time and maybe see what the average ratio might be over 3 years or over 5 years to see whether the business is profitable and paying claims. Because in some years we would expect maybe to pay very few claims, and in other years we would expect to pay a very large number of claims. So these two products really illustrate why it's very important to collect information separately by type of product, because we need to investigate what's happening with our weather index or our agricultural insurance, and look at what's in terms of the claims very differently to how we would consider what is happening in the health insurance business. So when we're setting up our reporting templates, we want to make sure that we can gather information on a product level, or at least on a product type level. So thanks very much. Let's look at our final KPI and assessment. So here we would consider whether our customers are being treated fairly. So we're going to look at two aspects of the treatment of customers. So the first is the value of the product. So for that assessment, we will consider the claims ratio and the expense ratio. So the first two ratios in the table. And then the second assessment is the experience of the customers. So for that analysis, we will look at all the indicators from the renewal ratio all the way down to the complaints ratio. So let's have a look first at the rating that we would give. Oh, yes, Miriam?
Sorry for interrupting. I have just one question about this increasing risk rate about agriculture insurance. I have to mention again, once again, pandemic situation, and it seems that the agriculture sector just increased, and there are much more participants than earlier, depending on my country's example. And how does it affect on the risk level? Maybe it makes sense that it's got higher because of so many participants, or not, or it doesn't matter.
So Miriam, did more people buy insurance since the pandemic?
Yep.
Really? So
I mean, they just realized that this part of agriculture, I mean, feeding and the food, it's real necessary, and you can just import everything sometimes because these countries need their production themselves. So they start producing domestic products. I mean this. So just
okay.
the market is increased. I mean this.
Yes, so that's a very, very important question. So I think here your big concern will be whether the insurers have got enough reinsurance. So reinsurance is very important for agricultural business. So you can't necessarily in a small country diversify your risk, where in some places there might be a flood and in other places there wouldn't be. So that's why I think most importantly, you would want to consider reinsurance and whether the insurers are using appropriate reinsurance. Also, if the market's really growing a lot and the insurers don't have additional capital, they definitely would need reinsurance to be able to support any claims that they want to pay. So for me, the best solution there, it's good that it's growing, but yep. Until the market can maybe increase its own capital, they really will have to rely a lot on reinsurance, because the reinsurer can insure business all over the world. So for them, the risk is not so big as the insurer that's just working in one country. So it's good to hear that the market is growing, but yes, there are a lot of risks, I think, in terms of managing capital and having enough reinsurance.
Thank you for answer.
That's good. Okay, so let's have a look at our fair treatment of customers. So whether, or at least, and our product values. So let's have a look at our claims ratio and our expense ratio in the poll now, and rate whether we think that the product is providing good value for customers. Whether it's so high means that it's not good value for customers, moderate means it's average value, and then low would mean that it is good value for customers. So it's the opposite way around. So if it's high risk, then it's poor value for customers. And if it's low risk, then it's good value for customers. So far we have a third, a third, a third. So let's see how what other people think. So I'll give a little bit more time. Okay, so let's look at the results. So most people felt that the risk rating is moderate. There are a few people who have voted high and some people who have voted low. So let's look at our claims ratio. So that's sitting at just over 30%. So that means that a very small amount of the premium is going to pay the claims. So less than a third of the premium is going to pay the claims. So most of the premium is then going to expenses for the insurer. So just over half of the premium goes to pay for the expenses of the insurer. And then there's some amount that would go to the profits of the insurer. So the insurer is making just under 70% of the premium is going to pay for the insurer's expenses and the profit. So do we think that that's a good value product for our customers? So you can answer that in the chat or put your hand up if you want to answer by the microphone. Okay, so this is a very good point. So yes, for the customers, it's not good value, but it's very good for the insurer because they're able to pay their expenses and earn a profit. But we need to, as the insurance regulator, we need to make sure that our customers are protected. So we want to make sure that our customers are getting good value for money products. And one of the reasons why we would also want to encourage our insurers to provide good value for money products is that if customers are seeing the value of the product, if they're able to claim for their products, claim on their products, then they will see the benefits of insurance. But if the product's poor value, then they won't see the benefits of insurance and then they might cancel their policies. So we really want to have good value products in our markets, to grow our markets and to develop a good reputation for insurance. So because of this very low claims ratio, we should vote this product as a high risk in terms of product value. Berebi, I'll talk about the concentration by source of business in a minute or two. Kofi?
So I just wanted to comment on the claims ratio issue. Yes, as was said, it's good for the companies, bad for the customers. It may be bad for the market because very few people get payout from the company. There won't be very good news about this product, and it's going to be pretty difficult to market and to get a lot of people to sign onto the product. We know that insurance works on the law of large numbers, and if only a few people are benefiting, then it's creating a problem in the larger market. And so products with very low claims ratios, aside of being good to the company, might end up actually harming the market. And so as regulators, we will need to pay attention and investigate what exactly the issue is. Could be that there is a problem with the scope of what the product covers. There's a problem with the documents needed to make claims. There's a problem with the rate at which I see the claim rejection rate at 30% and claims paid in more than 30 days at 60%. Could be the rate at which the claims are being processed. Could be due to a whole lot of things, and it might just be interesting to dig into it and find out what exactly is happening. Thank you.
Thanks very much, Kofi. Does anybody else have any other comments, at least in terms of the claims ratio and the expense ratio? And then we'll go on to the question about the concentration by source of business.
Hello, I am Abdul
Hi.
from Tunisia. I think this ratio is very low due to the shift or lag between the date of payment of premium and the
Abdulsatak, can you speak into your microphone a bit? We can hardly hear you.
Yes, I think this ratio is very low due to the shift or lag between the date of payment of premium and the date of settlement of claims.
Thanks, Abidissar. Yes, so we have a big question about the very low claims ratio. And then when we looked at the treatments of customers, so that would be our second investigation, we can see that there's a high claims rejection ratio, a very slow time to pay claims, and a quite a high complaints ratio. So there is a big issue in terms of slow claims and high claims rejection. So customers are not being treated fairly around the claims processes of the business. So we would also want to say that it's high risk in that respect. And then, yes, so Adriana, that's also a very important point, is we need to understand the reasons for the complaints. So are people complaining because the claims are being paid too slowly? Are they complaining because they thought that they had cover for a particular type of loss, and they're not covered for that, or that's an exclusion? Are they not understanding their products well? So yes, so just having the complaints ratio is not enough. We need to understand the reasons for the complaints and to see what people are not understanding or where their expectations are not met. So that's also a very important point. Thank you. And then lastly, let's have a look at the two ratios that we haven't considered. So the first one is that concentration by source of business. So that tells us how much business do we get from, or how many distribution channels do we have? So do we get all of our business from one distribution channel? So then our ratio would be 100%, which is what's shown there. Or do we have a few distribution channels and maybe we get 25% of our business from 4 different distribution channels? So that concentration by source of business tells us where that most of our business all of our business is coming from one distribution channel. So maybe it's one microfinance institution, and that means that that microfinance institution has a lot of power in terms of the partnership, because all of the business comes from them. So the insurer would be likely to be to agree to the demands of that microfinance institution. And that means that the customers might not be treated well or might not be protected in those areas. So it's always good to see where the business is coming from and whether all of the business or most of the business of that insurer comes from one particular distribution channel. And then lastly, our renewal ratio is not important for credit life business, because once that loan is paid for, then the insurance will be cancelled. So you're not going to be renewing your policy for credit life business, but you would need to renew your policy for health business and for agricultural business. So this ratio, the renewal ratio, is not important for our credit life business. Does anybody have any other comments that they want to make about the treatment of customers? Okay, great. So think about whether you use some of these ratios or in your when you collect information either for conventional insurance business or for inclusive insurance business, and see whether this would be providing you with useful information to be able to understand the customer's experience of the business. But we can go to the next slide. I don't know if I need to move it now. Okay, so we can't just analyze the risk of the business and then stop there. We need to determine where the weaknesses are, and then work with the insurer to implement corrective measures to address the problems and concerns. So we did have a little exercise on the learning management system of looking at appropriate interventions for certain weaknesses in the insurer, but let's have a look at a few more. So it will be good if maybe we could have somebody who can give us some suggestions on what an appropriate intervention might be for the insurer that is having a deteriorating solvency position, like the first insurer that we looked at in the market, in the slides today. So what would you do if you found that the solvency position or the solvency margin of the insurer was decreasing over time? So you can give your answer in the chat, or you can put your hand up. Or we can also look at all of the other possible areas of weakness. So if you want to give some responses to what an appropriate intervention might be if the claims experience is very high, so that was for our health insurance business, or for our poor value products, or whether there's a very slow time to pay claims.
On the deteriorating solvency, I would issue a warning letter from the regulatory authority to the insurer, and potentially fine them as well.
Oh, okay, so they do need to. So the insurers need to be aware that they are being monitored, and that the supervisor knows what is happening. So definitely you want to highlight that there is a problem. Implementing a penalty could be a challenge for an insurer that is constrained financially. So it's a very difficult road, but you do want to have penalties. So often, I think what's now required in many regulatory systems is that the insurer will produce a plan of how they are going to correct their deteriorating solvency position. So whether they're going to maybe reduce expenses, or whether they're going to raise additional capital. So the insurer should be coming up with that solution. What about problems that are more related to the treatment of customers? So things like slow payments of claims, like we saw in that previous slide, or poor value products.
So on the issue of slow payment of claims, you may want to investigate and find out what is causing that, and then you may ask, give some directive to the insurance company to address those issues. For example, is it got to do with difficulty in obtaining a document with which to make the application? Is it taking too long for the claims officers to process the claim? Is it due to liquidity problems at the insurance company? As you said, for the deteriorating solvency, that may have an impact on the slow payment. It may be. So as part of the plan, this would be sorted out. But if liquidity and other indicators are fine, it may be due to some behavioral problems. So depending on the situation and depending on what the market conduct regulations are, some sanctions may be necessary carefully, but the most important thing is to look into what may be the probable causes and getting the company to address those issues.
Great, thanks, Kofi. And then we've had some suggestions from Louise that we would want the insurer to increase their assets or to find additional capital. So they either need to manage their costs or they need to increase their assets. So yes, that would be helpful. And then in terms of Radina, if the product is not good value, then maybe they need to look at redesigning their products, maybe some of the terms and conditions, or maybe consider the premiums that they're charging to provide a better, or their expenses to provide a better value product. But I think what Kofi said is very important, is we can't decide on the intervention until we know the cause of the problem. So we really need to investigate further to see what the cause of the problem is, and then to maybe they are requiring documents that are too that take a very long time to gather or take quite a long time to analyze for the claims process. Maybe they can change their claims process to be more efficient and more appropriate to the customers. So we need to look at the reason for the problem and then tailor our solutions to work with the insurer to come up with a better solution for their customers. And then finally, I'm not going to look at these questions now, but I think it's very important. Abidazar, you can ask your question now before I go on.
You can hear me?
We can hear you now.
I think here the company must implement a formal process of payment of claims, and the insurance supervisor must require a fixed period of settlement of claims.
Yes, so we definitely want the insurer to have good processes and efficient processes so that they can really service their customers well. Thanks. That's great. So these slides will be available for you after the session. So please have a look at what your strengths, your supervisor's strengths are in terms of the information that you gather. What you would like to improve on in terms of the information that you gather and you analyze, and how you'll be able to implement those processes. So we don't want this training to end at the end of today. We want you to try and implement some processes over time to improve your data analysis and your data gathering. And then lastly, I just wanted to say thank you for your participation. It's good to hear some of the experiences and see some of the experiences in the chats. Does anybody have a last question? Okay. So I'm going to wish you well on your journey in terms of gathering more information and analyzing information about inclusive insurance. And please, thanks very much to everybody who completed the case studies and all the work, the questions. I'll give proposed solutions to those case studies and maybe some summaries on some of the insights from your responses. And enjoy the rest of today's session. Thanks very much and have a nice rest of your training.